Hey, what's up, everybody? So I know this video will definitely be very different from the typical gaming videos that I usually do. So I am a gamer. I've been an MMO player, video games since I was a kid. But something that I did get into when I was in my 20s, my early 20s, I became a day trader. A buddy of mine, just a little background, a buddy of mine that I had back when I was running my own business. I had a swimming pool business way back when I was started when I was 17 till I was about 31. And when I was about 21, 22, I'm 40 now. So about when I was 21, 22, a buddy of mine went into being a broker. He wanted to be a stockbroker. This was back at the hype of the boiler room, the boiler room days. And I really wasn't interested in being a stockbroker, but a guy that my friend knew was into day trading. And now the guy that I worked for, that I did jobs for, and the guy that I learned my trade from of working with swimming pools, he was also an investor. He was like a swing trader, and I used to watch him, upstairs in his office, and I used to watch him. And he always watched the market between him and his partner. So that kind of is what got me interested into the market. I got my licenses, my Series 7, 63, etc. For day trading, and I day traded for the better part of about 8 years, and then subsequently left, changed jobs, went into nursing, which is where I've been in medical field for the past like 10 and a half years, right? But I've always um, dabbled either mostly through swing trading and kind of like long-term investing. So between the last couple of years, I have been trading a lot more. For 2020, my goal was to, like I said, I think if you've ever watched any of my streams, was to purchase a home abroad, right? Because my goal is to live abroad. So with any event, I decided my goal was for 2020, I was going to get much more active into day trading, into the market. I learned how to trade a really long time ago. I still know how to trade. And for whatever reason, I never really kind of got into it. Um, for whatever reason, maybe I was scared to lose money or what have you. So I still do work, but I still do actively trade, whether I do swing trading, options. I mostly do options and stocks. I don't do penny stocks. Most of the stocks that I trade are typically I'd say like between $10 and $20, and I might dabble in stocks that are between like 25 to 50, but then it gets a little bit expensive as my trading account is not that big. I've got about a $34,000 account, and I've done very well even working with that a small amount of money. So even with an account that's like 30,000, you can easily earn, I shouldn't say easily, but you can earn $1,000, 1,100, 1,200, etc. Even on a small account, you really don't have to have like this exorbitant amount of money. You just have to be very careful about how you utilize the money that you do have. And so in any event, I've been literally been trading this CMC all week. Since Monday, I traded CMC, Mattel, GPS, and what was the other one? God, oh, APA. So I've been trading literally those stocks all week, and I did fairly well. I was up about 2,800 for the week, which was fine. Um, and it's for that's basically my goal, is to take all the money that I'm earning from trading and then use that to purchase the home, and then I'll probably just end up renting that like on Airbnb or something. In any event, for those of you who are interested in trading, it doesn't take a lot of money to get started. I started getting back into trading with the app Robinhood a couple of years ago. A buddy of mine at work showed it to me. I kind of got involved in it. It kind of like sparked my interest in getting back into like trading, not just investing, primarily because fees are very expensive. So way back when I traded in an office, I traded for a proprietary firm here located in Manhattan, and they charge you a fee, just like you if you use like E-Trade or like any of those other companies. They charge you like a flat rate, was like $6.95, up to 5,000 shares, etc. But when I traded, I think I got as low as zero point 0.7 a share. I think zero point 0.7 or 0.65, I forget. But in any event, what that means is they charge you zero point 0.7 cents per share. So if you trade 1,000 shares, they charge you what is it, $7, whatever the math is, right? So that's how I worked, and then basically they gave you a percentage. So if they charge you a per share fee, but then they also kept part of the profits. So I think I got up to 90%. So I kept 90% of the profits, or 95, I forget, whatever it was. So for the most part, you kept most of the profits. I think they started you off at 75. You had to withhold 10% into like their account as a cushion. And then they paid you out the 75%. I got up to, I think, 90% payout, and 5% had to stay in the account. I forget. Or it was 90 and 85. In any event, you kind of get the gist of what I'm saying. With that said, some of the positions, tradings that I have gotten into was like, for example, CMC. And so going back to why I recommend things like Robinhood, I'm not affiliated in any way, shape, or form. I don't get anything. The one thing I liked about Robinhood and why I would recommend it is because it allows you to trade one share. The other good thing about it is that since you don't have 25,000 into an account, you can't day trade technically in the US unless you use like an outside broker. Those outside brokers will charge you a huge amount of fees per trade, right? So I think like if you use, for example, like Short Trader, they charge you, I think it's like $7 a trade. So that means $7 to get in, $7 to get out. So if you're going to utilize something like that, then you have to maximize the amount of money that you make. And then of course you can get churned out just by fees. The other thing is that when you're trading, so that's one route that you can go, and you can end up, churning your entire account that way, especially if you don't know how to trade. The other thing that you can utilize is like paper trading. Like for example, if you use like, there's numerous forms of paper trade. Even this platform has one. Even if you use something like TradingView, for example, has like a paper trade. The reason I don't recommend necessarily utilizing paper trading is because you have no skin in the game, and since it's not your money, you're not going to get, as they say, the sweaty palms that you're actually in the actual stock itself. And so I do recommend actually utilizing something as simple as Robinhood, because you can put in, I would say like $100 to get started. The reason being is so that you can buy multiple shares. I do recommend trading at the very minimum of 3 shares. The reason being is because you should never fully be into a position, just like you should never fully get out of a position. You should scale into a position, and you should learn to scale out. And that's why I kind of recommend just the simple 3 shares buying and selling of a particular stock, learning to recognize patterns, and then learning how to scale in and learning how to scale out. The reason being is because the reason that you don't want to get all in is because, for example, if I, for example, like looked at this position and I was like, oh, it hit, this numerical value multiple times, and I think I'm going to go short. And so I go all in short, and then it pops up against me. And now I'm taking a bigger loss than I normally would had I just scaled into it and waited, for example, for it to break this particular numerical value and then shorted more on any sort of a pullback. The other reason is because also I don't like buying is for the exact same reason. You're more likely to help kind of escalate the stock going in a direction buying if you're waiting for the last minute to get out on buybacks. So that's why I recommend, if you're going to be going either long or short, I do recommend using at least 3 shares. It's very easy to use on Robinhood. It isn't exactly like the most advanced platform because you're typically utilizing your phone on the app. The other thing is that it allows you to trade very slowly, which is very important to learn at the very beginning of trading. Most people, like I've watched other trading videos, and they're usually trading like on the NASDAQ. And the NASDAQ, the numbers are just flying back and forth on these very low penny stocks that they trade. And they typically trade a lot of volume. You're usually seeing them trade, several thousands of shares to try to grab, smaller numerical values on bulk, which ends up killing most traders. Like most people who try to trade end up losing. It's like 80% or more. It's like 80 to 90% of people who attempt to trade end up failing. It's a huge numerical value of people who try to trade and are unfortunately not successful. And it's typically because they don't learn one of the most important things that you need to learn about trading, which is patience, which is why I recommend utilizing Robinhood and trading very slowly. The other thing that's good about Robinhood is that if you don't have more than 25,000 into account, you're not allowed to day trade. Well, I should say you are allowed to day trade, but you're only allowed to make 4 trades before you hit the pattern day trade rule, which is that if you trade over that, then your account can get locked out because you have to have at least 25,000 in your account to day trade. So that's one thing. It also helps you where if you're going to make trades and they're going to be day trades, like for example, maybe I'm gonna go long here and then sell it here within the same day, right? That's a 1 day trade right there. So I can only do that so many times throughout the week. So that makes me more keen on making sure that the trade that I do make that's going to be a day trade has to be a good trade. Or if I, for example, went long here and I'm like, shoot, this was a stupid idea, and so I would have to sell it at some point. So as instead of just sitting here, I'm going to hold because it's going to be a day trade and I'm going to waste it. So this helps you to be more precise in the trades that you make. The other good thing is that it does allow you can make a few day trades throughout the week, but it helps you swing trading. And swing trading is typically much slower. Excuse me. Swing trading can typically be much slower. For example, looking at a longer viewpoint, like let's just say, excuse me, getting over a cold. Let's just say, right, you were looking at this stock. You bought this stock, right, back at the beginning, back in December, right? You bought this on the 20th, and then maybe you held it for a couple of days, right? It allows you to watch. This is going to be my 1 day trade. I know that if this stock goes against me, I'm going to get out, right? So maybe I know that, for example, 2160, excuse me, 2160 is my out, right? So maybe I bought it here at 2180. So a common profit to loss is it should be at least a 3-to-1. So if I'm risking, a 20-cent spread, I should be looking for at least a 60-cent movement. So I look back at the chart and I would think, okay, does this chart have the ability to move in that direction? And I can see that from 2880, there is room for it to go to 2280. Excuse me. So I know that right away that this chart can move. So my best bet is to try to get it as low. And I can see here that there's all kinds of support here and here. And then again, here, 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 and here. So if I would have watched this position and I was day trading or swing trading as a new trader, I will look at the chart and I'm like, there's a lot of room, came down quite a bit. And now I see that it's kind of, ping-ponging back and forth between, the low of 64 and then coming up here. So maybe I'll wait for it to come down and I'll purchase it down here. Or I'll purchase it right here. I'll purchase it at 75 or anywhere around here. But I know that my day trade out, if it happened intraday, would be at 60 because that's where my resistance was, and that's how much I was willing to give up, which was the 20 cents, so that I could get at least 60 cents, right? So looking at this trade, if you would have swung from the 23rd to the 24th, I would have already hit my mark, right, or close to it. Because I would have bought, let's just say you got in at 80 or 75, and then from the 23rd to the 24th, you're already at 22.20, right? So I'm 40 cents in the money. And then it eventually does get to my target out, which was 40, and then there's my swing. Now, granted, you could have held this and you could have gotten out here at $24. This would have been an amazing trade where you went in at 21.80 and you got out at 24, right? You made $2.20, right? Which would have been a great first trade. And of course, there was no reason to get out, right? Because like I said, if you were looking to swing this, there's no reason to get out because like I said, your target out was what? Your target out was 2160, right? Because I knew I was going to give at least that little bit of leeway for the stock to move And it never went there, right? At the worst, it went back to 2180, where it kind of gapped down, and then if you would have still been holding, let's just say you didn't get out, or let's say you scaled out, right? We scaled in with our 3 shares, and then maybe once I hit 40s, I got out here, and then I held on to my 1 share because I want to see what's going to happen, right? Let's say you come in the next day and it's, you've been holding this stock for the past, week. Excuse me. And then you wake up, January 3rd, and you're like, oh shoot, my stock gapped down. But I already know, right? I already know that my support was there because that's where I bought. And I know that my out was 60. So what would you have done in that scenario is you would have waited, right? This is important to develop patience as a trader. It's one of the most important qualities that you can work at is being patient as a trader. One of the first things I wanted to talk about was the patience that you need for trading, because there's a lot of wiggle room, especially when you're watching on a 1 minute chart. You watch I've seen a lot of these different videos on day trading, and you see them like, oh, like here's how I made 500 a day, today, or whatever amount. And you see the charts, and they're just like they're doing this and you're looking at their level 2. And it can be very confusing. It's also can make you very anxious watching and being in those scenarios, because you can lose very quickly when you're trying to scalp in those small trades. I've seen people that have these really, really poor profit to loss ratios, where the person was like down like 1,800, ended up getting lucky and making $100 in the trade, and they're like, that's how you do it, folks. And I'm like, not exactly. That's why I talk about one of the most important things when it comes to learning how to trade is the patience that comes with trading. Like I said in this example, had you been holding onto this stock when it gapped down to 2180, you would have immediately looked back to your chart. Well, where did I say was my out? Where was my cushion, right? It was at 60. So even on a gap down like this, the first thing that I would have thought of was, this is where I bought before, maybe I'll buy again, right? Knowing that my out is 60. And so what happens, you buy at 80 again, the stock immediately races right back up to your 60%, your 60 cent out. You could take profits if you want, or you can have patience and see where the stock is going to go. And if you had patience, then you would have gained the difference between $22.40 and $24, and you had ample time to get out at 24. It wasn't like it was 24 and then it immediately dropped. It hit 24, it came back, 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 until it finally collapsed down over the course of the 6th. And had you been patient, you would have been able to sell this. You would have been able to get $2 and whatever the difference was. And those are the huge movements that I typically trade for. You will find people that will take those snippets of 20 cents, 30 cents on like 5,000 shares, but I don't like one, my account isn't that big. 2, I don't like to take that amount of risk. If I typically trade like on a 1 to 5. If I'm willing to risk a penny, I typically want to make at least 5 cents. Most of my trades, I look back at a lot of my trades and I could have scalped 20 or 30 cents, and I'm just holding. I'm holding for the bigger moves, for moves like this, where I'm long from down here and capturing these big movements, or where I'm short and I'm capturing these big movements. Right? And like I said before, this was another very good example. Had you sold here, right? Looking at the chart, what did I say was our out, right? 60. And where did it hit? It hit just below 60. And what did it immediately do? It immediately bounced back up, right? So this is a very important, it's one of the most important things that it comes to learning how to trade. I would go over a lot of my other trades, but I think CMC this week was really good. They had news. APA was another one that I did. APA was another good stock. It came out with there we go, Apache oil. This was another one that kind of gapped up. I did not get the gap up. I got the short. I got the short from 33. I got the short from, excuse me, I got the short from from 33, and I held it over the course of a day, and then I ended up covering earlier today. I ended up covering down here at 31.60. But I only had a couple of hundred shares, but it was a good short, and I held it. I held it for the better part of like 2 days, before it finally came down, and I covered like right around here. Why did I cover? Because it started basing right here. This is why I covered, because it started basing out, and I saw the exact same thing over here. When I watched it for a little bit. I saw that it didn't look like it was going to get past here, and then I reshorted around. I shorted it when it came over here because I saw the weakness at 33s, and I saw the weakness again, the indecision here, and then I just waited. And I just waited. I could have made no money. The stock could have gone back up to 33s. It was up $6. But typically when stocks gap up like this, they sell off slightly. And so you can make money on the sell off. But sometimes, like I said, you gotta be patient and wait for it. Anyway, I will be back. Probably try to do one of these maybe like, I don't know, once a week. Recap. Like I said, I traded this. I traded GPS. I don't know if it's gonna show up. Traded GPS, which I've been holding. I actually have a couple of thousand shares of this input and options. I bought a bunch of options. I have stock. I've got about 750 shares of it, and then it gapped down on me. Right, I'm long at like, shoot, I've been holding this for a little bit. I'm long for a while, but in any event, so I've been long from way back, like a couple of weeks. I've been holding on to this. I'm like down. It was like 1692. I've been long. I think 1692 or 1698, and then I ended up buying options. I was waiting for this stock to break 18 for the longest. Like this is what the stock looked like, right? It was like meandering for the longest here, like 1780s. I'm like, once this thing breaks 18, it's gonna fucking go. So it finally did. It finally broke 18. I ended up buying a bunch of options, gap down, and I'm like, they downgraded. Like literally the day it finally broke 18, I'm like, I'm gonna buy more. So I bought a couple hundred more shares. I bought a bunch of options. It gaps down. They're like, so and so, downgrades. I'm like, motherfuckers. So what did I do? I waited. I knew that the low was down here of 17s, and I knew the stock was going to go. I know the stock is going to go up. So I waited, was patient. Ended up buying like another 1,500 shares in options, or another 15 contracts, as well as I purchased another, I think 250 shares down here at like 40. And then I had a total of 30. I've had 30 1750s. I had 18s, and then I bought more 18 options, and then I think I bought the 1750s, and then I ended up selling them right here. I ended up selling on the first push here at 80, or was it at the beginning of the day? I forget. I know I ended up selling some here, and then waiting, and then selling the rest of my 1750s right here at the end of the day, and then I still have my my stock long. But I think the gap will go up. There's a bunch of nonsense going on in the stock, but I still think it will go up. But in any event, this was another one of the trades that I've been holding, waiting patiently. In any event, this video is getting a lot longer than I wanted to, but I will probably come back with like a weekly recap on what I traded. Like I said, I traded CMC, APA. This was a good one. APA, CMC, GPS, like I said, and Mattel. Mattel was another trade that I've been holding for the past couple of days, and I've been short. I shorted up here. I was stupidly watching this on the long, and I'm like, why is Mattel ripping up? Like, this stock sucks. Like, why is it like making this huge move from 30? This is another reason why you can make really good money trading these very cheap stocks. Right, this is a $13 stock. It went from $13.20 all the way to $14.40 within the span of 1, 2, like 3 days. Right, so if you would have waited, you would have gained $1.20 on a $13 stock. Right, with ample room, as you can see, this ample room where you could have gotten out at the 40s, here, here, and here. Right, even if you took 30s here, you would have been fine. You'd have been golden. Even if you waited and got it here at 30, you would have made $1 on a $14 stock. This is why I say that I try to stick to these, and especially because they're very liquid. You can see the volume is 2.3, but in any event, this video is getting much longer than I wanted to. So with any event, if you have any questions, feel free to leave them down in the comment section. Like I said, if you're new to trading, I highly recommend utilizing Robinhood. I'll probably go over maybe a little bit more in depth about some of the beginning things of trading. If that's something that you're interested in, feel free to leave it in the comment section. Thanks for watching. Take care.